Hello, welcome to my YouTube channel. My name is Javier Fernandez, and well, in this video I'm going to explain you how I trade the markets, especially how to identify the trends, because there is a common mistake when we are trying to identify the direction of the market. Because look, most of the people, what they do is this. They look one moving average, one medium term, and then one long term. For the medium term, 70 periods, and then for the long term, in orange color, 200 periods. So for them, the most of the time I trade shares, but in this case I don't know why we are analyzing the euro Australian dollar. It doesn't mind in technical analysis. Well, so what the most of the people they do is just put one low moving average and then one medium moving average, 200 periods and 70 periods, and then they identify the trends according to that. But there are other models that for me work better. For example, using the MACD, moving average convergence divergence, to identify when the trend is powerful and when the trend is losing his power. For example, here we have a positive trend. The value is growing up, but here, for example, we have we can see that the trend lose the power, is falling down. There is a micro down movement here, okay, and we cannot identify this movement when we are following the trend in long term, the typical trend. So if we use the moving average, for example here, we can see when the price is just losing power and when the power is going to the correct direction of the trend, and just here. Okay, and this is very useful. But for me, this euro Australian dollar is not now a good moment to trade. Okay, why? Because what we are looking is things like this, for example, when it's clean, when it's a clean grow or clean decrease. Okay, and it don't necessarily needs to be in the right direction, because, for example, and this is why the moving average convergence and divergence works very well in these situations, when the trend is losing his power, is, for example, here. As we can see, we have a negative trend. The price is just falling and falling and falling, but at some moment here we can see that the falling is just stopping. So how to identify this movement? If we are working only with the moving average, that one and that one, the blue and the orange one, we cannot see this action until too late, until here. When it's too late, we are losing a lot of money. So that's why the moving average sometimes give us the opportunity to enter in the position before the moving average react to this fact. Okay, for example here. Okay, and then for example here, the price, this horizontal line represents the 200 medium period average, and then that one is 50. So and this is the blue line is the price. So the price is here with positive power in a down trend. So it can be an indication that the trend is changing to a positive one. Okay, and then in this moment is when we can have a look to the short period moving average convergence divergence indicator and the stochastics. Other tools that we have here. And how does it work? Well, negative trend, some resistance, the price is changing, positive power here, the short moving average convergence and divergence here is crossing the 0 line, the low stochastic is crossing the 50 line, and then the fast one, the fast stochastic, is also working on the positive areas. Okay, so this is a good moment to keep in mind, to be aware, because it's probably an indication that the trend is gonna change soon. If we follow this position in 1 or 2 weeks, we have the entrance here, this entrance crossing the fast stochastic, the 50 line, the red line here, going up. The MACD is also going up. Okay, all the indicators are going up. And then we have this fast and strong movement going up, where we can earn some money here. Okay, and why it's important? Because if we just have a look to the 200 periods moving average and the 70 periods moving average, we lose this movement when this is a very powerful movement going up that changed the direction of the trend in the chart, and that's why it's very important. So, for example, here, when the price arrives to this area, let's see more examples. Okay, let's see more examples. This zone here is a positive trend, but it has not powerful movements. Except when the price is going up here in this movement, we have a doesn't mind a lot of well, with this model we can identify a lot of powerful movements of the price, and that's why it's very useful. But the first thing is to identify the trends. Let's see another example. Well, here we have another example. For example, here. Well, my computer is working a bit slow. Well, this is maravilous. Look, this is awesome here. Okay, here there is not a trend defined. It's not a trend, but on this moment, the moving average is giving us a positive movement. When the typical moving average are not saying anything, and this is and here we have a very good opportunity, and if we are following this average, we are losing this opportunity. So, just according to the model that I'm just describing here, the only thing we need to do is just wait for the fast indicators, the typical moving average, convergence, divergence, 12, 26 and 9 periods, and the stochastics. And here, for example, when the price is just going on approaching to the 200 average here, the slow stochastic is just crossing is working on the high area of the stochastic, up the 50 line, the 50% line is just that one, the red line. And then, for example, here the blue color, the fast stochastic is falling and then going back, retrieving the power of the positive trend. Here we have a very good opportunity to buy, even when the typical moving average, the orange and the blue one here, are saying that the trend is negative. Why is negative? Because these two moving average are influenced by this down here, and that's why it's falling and it's not reacting yet. But the MACD is already reacting to this price action, and it's giving us a better opportunity to enter in buys. So here for example. So have a look. This is a very maravilous opportunity. So this is what we need to look for when we are looking the best opportunities in the chart, in the markets. Okay, it doesn't mean that working with the average and with the typical and classic average is not useful, because it's also very useful. Of course it is, but always together with the indicators, with the MACD, not just as an indicator that give us the best moments, if not also as the indicator that help us identify the market momentum, the trend. Okay. So well, I hope you find this video useful for your trade. If you have any questions, you can just send me a message on YouTube. And well, this is the strategy that I have been using, and it's working well for me. Okay. In all the products, not also Forex, also shares, because as I said before, the most of the times I'm working with shares. Okay, thanks for watching me. Bye.